Hi, this is Dana Stalder with Matrix Partners. I'm here with Scott Loftesness today with Glenbrook Partners. And this is one of the Matrix Partners sessions on FinTech. And today we're talking about mobile payments. Scott, why don't you tell us a little bit about Glenbrook just to give some context?
Sure. Glenbrook is a small boutique consulting firm. It's coming up on 14 years old, May 1st, or March 1st, it'll be 14 years old. Three founding partners, actually, myself, Carol, and Alan Weinberg. And we have 8 partners currently. And we consult across the industry, increasingly doing more work actually globally outside the U.S. as well.
And what's your background, Scott?
I grew up in IBM. I was a big mainframe systems engineer, as it was called back in the day. I started with IBM in San Francisco. Left IBM in 1985 after almost 20 years to join a small company up on the hill in San Mateo, which at the time was about 300 people, and that was Visa. And
I've heard of them.
When I joined Visa, we were right at the cusp of transitioning from paper acceptance to the electronic point-of-sale draft capture.
The old
click.
Yeah.
And so the second half of the 1980s was actually moving from paper to electronic, and very exciting time. And I was there for about 10 years, then joined First Data, was there for about 5 years, and then started Glenbrook.
All right, good. So I guess you know a few things about payments.
Yeah, too much.
Having seen the evolution.
I sometimes feel like Dr. No when I talk to entrepreneurs. I know too many things, right? That's the great thing about entrepreneurs is they don't know everything.
That's right. That's right.
So.
I would say certainly the hottest topic is the advent of mobile and the impact that this mobile revolution is having on payments. I'd love to hear your thoughts on where do you think we've been since kind of the introduction of the iPhone and the introduction of the smartphone up through 2014, which finished with the introduction of ApplePay. And then secondly, where do you think we're going over the course of the next few years?
It's been an interesting, I guess it's now 8 years since the iPhone was announced, hard to believe. 7 years since the App Store actually came along. But I must say, we teach a series of payment boot camps over the course of the year. And beginning probably 5 years ago, we started spending a considerable amount of time on mobile payments in the second day, where we talk about emerging technologies. And so over the last 5 years, we've kind of covered every science fair experiment that's taken place using mobile technologies around payments. And it's been a fascinating evolution.
Been many.
Yeah, been many. Using all of the last inch technologies of barcodes and cameras and audio, Wi-Fi technologies, Bluetooth, etc. Everybody's been trying lots of different things. The hard thing about payments is that you have these double-sided adoption issues. So the real question is, you might have a device which has rich last inch communication technology, but that's got to be accepted at a merchant location. Right. And how do you get both of those to be essentially upgraded?
Yeah.
So I remember about a year ago in early 2014, I just had a sense that we had been through 4 or 5 years of sort of chaotic exploration of the landscape of possibilities. And 2014 to me felt very, very much going into it like a year of sort of digestion and coalescence, and sort of, not a lot of new game pieces being put on the game board, but more kind of pausing, sort of thinking about what was going to actually take place. You had folks like MCX who were just getting into the development of their current C application,
which is a cooperation of
the large retailers
in the United States.
Actually, almost half the payment volume, in the U.S., attempting to do a proprietary to them mobile payment scheme, yet to be sort of officially launched. You had SoftCard, formerly called ISIS, unfortunately, but now called SoftCard. The 3 biggest U.S. carriers, in the market, trying to
T-Mobile, Verizon, AT&T,
trying to do mobile payments, again with not huge success.
Yeah.
And so it was not quite clear, and frankly, everybody was kind of waiting and watching what was Apple going to do. Apple had historically been talking more about BLE, Bluetooth Low Energy technology.
Yeah.
Made some comments about you shouldn't need to tap, some of those kinds of things. I remember a Phil Schiller quote at one of the keynotes. And, you know, so the open question was, what was Apple going to do? And, of course, once the iPhone 6 was announced with NFC capability for the first time.
I think there's been a lot of competition between new entrants and incumbents. And
Correct.
this mobile revolution has created an opportunity for either global telcos, the AT&T and the Verizons in the United States, to have a more meaningful piece of the pie. New entrants like PayPal to have a more meaningful role in offline payments. And then you have the networks, Visa, MasterCard in particular, who were the incumbents and have probably the most to lose. And it from my perspective, there's been a little bit of a skirmish for several years. Everybody's trying to figure out how to take leadership position out of this. And it seems to me that ApplePay really is about the networks winning the first major battle in this war. Would you agree with that?
Yeah, I would say it's the second major battle, perhaps.
Yeah.
Maybe a different perspective on the networks is that they did enable, you know, GSMA did the homework around NFC payments and essentially establishing a role for mobile carriers in the mobile payments ecosystem. And that got embraced by the networks. You know, they essentially created specifications that enabled
NFC and secure elements
and a role for the mobile carriers in that ecosystem. And, you know, what really happened, I think, there was not a failure of technology. I mean, the technology all worked, but a failure of sort of business model. So you know, if you look at what the carriers here in the U.S. did with SoftCard, you know, I think they really failed to capture issuer interest in convincing issuers that this was a capability that consumers would want to use. And, you know, overhanging all of this mobile payments discussion is the reality that cards are not broken. Right? It's not like there's a huge pain waiting to be solved. I mean, trillions of times a year people are paying with payment cards. And we're all familiar with the experience and we know how to do it. So while we have had this sense of inevitability that we would move into this postcard world with the mobile device, there hasn't been a burning urgency. And so this combination of factors, I think, sort of held back, you know, really market acceptance. Issuers were sort of on the sidelines. They didn't necessarily want to pay the carriers, right, for what might be substitution
So the first battle in your mind was NFC?
Correct.
In the rollout of that. And I would say it seems to me the networks lost that, right, which is they tried to...
They would have a perspective that that was a huge success for them. And the reason it was a huge success for them is that contactless, you know, NFC's precursor, was very successful as sizzle in penetrating formerly cash-dominant acceptance environments like QSRs, the classic example being McDonald's. McDonald's for years was cash only. As a result of
so it was the catalyst for quick serve restaurants to begin card acceptance was the interesting. In spite of not a lot of volume actually ever showing up.
Exactly. But all those terminals that were deployed at McDonald's and others were capable of both magstripe and contactless technologies. So guess what? All of a sudden, McDonald's, you know, vaults into the number one merchant by transaction count in the U.S. because, you know, all the cards can be used.
But they were swiping instead of doing contactless.
Meanwhile, issuers found out they had hoped that contactless would help top of wallet position their cards, and they found out that that really didn't happen with consumers. And so issuers kind of backed away from sort of, you know, ubiquitous contactless issuance.
Now, interesting enough, that NFC, while it didn't work for 10 years, and there's a lot of many companies in that ecosystem started and failed, it became the foundation for really for Apple Pay. And I will give credit to Google because really the Google Wallet was the first to have this concept, right? In some respects, it feels like Google was too early and they didn't have the cooperation of the networks and the handset OEMs.
Google kind of tried to enter, I think, without the issuer support, without the network support. Maybe tacit network support, but in particular, you know, really not issuer support. And as a result, and certainly not carrier support, right? Because the three of the four major carriers in the U.S. were off with their own agenda. And so, Google was effectively being blocked from the handsets for a while, on those three carriers.
Right.
And so that ended up being, kind of stillborn, frankly, the first version of Google Wallet. But they were, to your point, they
on
were
paper. It was
one of the.
It was ApplePay.
Exactly. They were right out there. The other thing I would say, so back to winning the second battle with ApplePay. Over the years, I just admire Apple's sense of timing. They watch what's happening, it seems. And something began to happen a year ago, a little over maybe a year and a half ago in the US, that became suddenly part of the solution for Apple, and that was tokenization.
Yes.
And back in the Google Wallet days, that was a concept that simply
so this is
didn't
important.
exist.
I think a lot of people don't understand tokenization and how critical of a core technology this is. And this will actually lead me into another topic I want to eventually get to you with, which is PayPal and the threat that tokenization might be to them. But can you explain briefly what tokenization is and why it is so important?
It's actually interesting because PayPal was an early form of tokenization. We didn't call it that, right?
That's right.
But it didn't reveal the card number to the merchant. And that was one of the key consumer value propositions for PayPal from the early days.
The core
was protecting the card data. Well, what tokenization? First of all, tokenization, I should explain. Tokenization has been used in the acquirer context for several years as a technology for essentially encrypting the card data when it's stored at the acquirer.
At the merchant side of the
So what we're now
system.
calling sort of network tokenization is what's happening effectively on behalf of the issuer.
Yeah.
And so the idea here is that you get a card with a card number on it, but when you want to use that card at a particular merchant, you don't actually use that card number.
16 digits never get passed.
Exactly.
Yeah.
The merchant that's going to accept the card gets a token. Let's say you want to put a card on file at United Airlines. You would give United Airlines the number. They would never store it, but they would get a token from the issuer. That's what they would store.
Right.
And then anytime they wanted to charge you for a trip, they would use the token rather than your actual account number. Now, the benefit of that is that in a world of data breaches, PCI DSS obviously being somewhat successful, but not
Home
protecting
Depot, Target, Neiman
all
Marcus.
the data breach things.
Yeah.
In the event that a tokenized merchant were ever to be breached, the tokens that they have on file are only usable at that merchant.
Right. And
So-
can be expired.
Can be expired.
Which, by the way, so not only reduces fraud, but saves a whole lot of consumer hassle as
Yeah,
well.
right. They can automatically be updated as well. So suddenly the attack surface
Yeah.
for fraudsters associated with capturing card numbers is reduced as a result of tokenization.
Yeah.
So I think Apple was watching tokenization as well, and you put these combinations together with the other technology that they had that Google didn't have, which was their acquisition of Authentic and the use of the biometric technology.
Yeah.
Initially just for convenience, right? Just for unlocking the phone. That was what was in the iPhone 5,
Yeah.
5S. But now being used for the authentication on a transaction
Second
basis.
factor
As a
authentication.
second factor
Yeah.
at the point of sale. So it's this plus secure element with tokenization at the point in time at which it came
Yeah.
together.
And it really is the bringing together of several technologies that have been developing for a decade. We can go all the way back to contactless and near field
So the
communication.
challenge for other, for Android players, Samsung, etc., is that integrated framework that Apple's kind of pulled together hasn't sort of become part of the Android world, right? Android has an alternative currently with HCE, host card emulation. And some issuers, Royal Bank in Canada's, deployed a solution that's based on that technology. And others I know are looking at it because they have both iPhone customers and Android customers.
Yeah.
But it's not, the soup is still being stirred, I think, with respect to the
Yeah.
mobile side.
But let me go back to the networks and Apple. I view this as, in many respects, Apple Pay was the ultimate coup for Visa and MasterCard because while everybody's jockeying for position in this mobile revolution and trying to figure out who's going to get pole position with the consumer, it seems like Apple Pay has secured Visa and MasterCard as they've now extended their tracks, if you will, of their payment system right into the iPhone.
Correct. I mean, all those transactions will be flowing through the, and American Express as well as part of that whole equation.
Now the banks are paying Apple. I think the rumors are roughly 15 basis points on average.
Yeah, half a penny or something.
Where does that money come from? And is it incremental cost to the card issuers, the Chases and B of A's, or is it?
I think it's this kind of goes back to the era that I talked about with SoftCard initially.
Yeah.
Does the issuer view these mobile payment transactions as substitution, in which case it would be incremental costs?
Yeah.
Or are these going to be net incremental new transactions, in which case you're just sharing a portion of the benefit that you receive? Obviously, it's somewhere in between. I'm a little more inclined to think in the early days it's mostly substitution. If I go to McDonald's and buy an Egg McMuffin in the morning and pay with Apple Pay using my Chase card, I would have paid with the Chase card anyway. So it's not that I'm buying more Egg McMuffins or there's no increase in ticket.
Is there an increased profit pool now that because tokenization is at the core of this, there will be less card fraud? There'll be fewer losses to the bank. So they're really just taking what otherwise would have been losses and giving a piece of it to Apple.
Yeah, although the basis points, if you look at the one of the unfortunate things in the U.S. market is there isn't public industry data on card fraud, unlike in the UK and so forth. But anecdotally, if you look at 6 or 7 basis points of card fraud, some portion of which you can't displace necessarily all of it.
Right.
Some portion of which could be displaced. You still have that as a smaller piece of the 15.
Sure.
So, but it's also part, certainly the bank marketing departments on the card issuers need to be part of this. I mean, Apple is a consumer brand, the trend of mobile devices, the huge acceptance. I couldn't believe 74.5 million iPhones shipped in the quarter.
Yeah.
iPhone 6s.
Well, I see billboards with Wells Fargo and Apple Pay and Citibank
promoting it.
I mean, it is.
Yeah, the issuers have really gotten behind promoting it. And that's all obviously part of, the bank positioning in terms of being on the edge and supporting all of this important technology.
And securing their position in this mobile battle. Certainly, if you are an entrepreneur and you're building loyalty platform, you're building solutions targeted at Main Street local business, I think you have to be thoughtful about the payment tracks, if you will, that have been laid are substantially changing here over the next 3 to 5 years.
Yeah, the migration to EMV and the support for contactless point of sale, even at small, mom and pop merchants. That's going to happen.
There was a post yesterday by a tech journalist about is 2015 the year of Apple Pay, and I actually tweeted back to the journalist where I thought no, it's more like 2016 or 2017 is going to be the year because there's still a lot of infrastructure to be laid down at the merchant side of the equation, right?
Yeah,
exactly. So we need NFC to be accepted at every small business in America. The EMV, the chip and pin technology, will be rolled out here over the next couple of years, and that's a 2 or 3 year wave.
Yeah, the other interesting dynamic that could come into play here, certainly the sheer number and presence of iPhones and Apple's success in delivering that product, you're beginning to see much more interest on the part of merchants, right, in terms of completing this upgrade process.
Yeah.
What's involved? How do I get it? You listen to the comments from Verifone and Ingenico and so forth. And they're kind of all over this.
Well, this is where I put a plug in for one of our portfolio companies at Matrix Partners, Point.
And Point is very much involved in that as well, particularly for that class of merchant.
Absolutely.
Right? And so that's going to be pulling more into the market. And then, the whole consumer experience with EMV is different. and not necessarily better.
Yeah.
You know, you have to stick the card in. It's not either a tap or a swipe. And so it could be...
Oh, and then you've got to enter
Yeah,
4-digit
you may
code.
have to enter a PIN or not. I mean, that's one of the issues. You may have to sign. Why do I need to sign if I have biometric? You know. So...
Well, it's interesting because one of the primary benefits, which isn't as real time, is, you know, this experience where I've probably had to meet 3-4 times in the last 6 years, where, you know, you look at your credit card statement and you're like, what the heck was using my card in Mexico last week and spent $3,000, and you cancel the card and you update all the numbers, and I think that's one of the core benefits that comes with EMV and lower losses and fewer stolen cards, but I don't think consumers will appreciate
it's frankly
that benefit.
Potentially less convenient.
Yeah,
but in that world, it's almost like the ApplePay approach or an Android's version that's similar may be more convenient.
Yeah, well, putting
maybe
my
it's
thumbprint
a
on my
leapfrog.
phone is maybe a little easier.
Yeah, I really don't want to
PIN.
use this EMV card given the choice that the merchant also accepts contactless, and therefore I can use Apple Pay.
Yeah.
You know, one of the key things about Apple Pay is there's no merchant contract to agree to, right? I mean, they don't have to sign anything new. If they accept contactless cards through their acquirer, they're good to go.
Yeah.
So I think those things are some dimensions of pull into the marketplace that we haven't yet sort of really seen how consumers are going to respond.